What's up, real life traders? It's Robert Falco here, and Dan Jansen and I are bringing you another edition of the Real Life Earnings Report. All right, good evening, Dan. Wow, what an earnings bonanza we have in store for everyone this evening.
The amount of companies they stack onto one day to make our lives just more challenging to go through all the earnings reports. But we did ask the community here at Real Life Trading, which is the ones they want us to focus on. So we did narrow it down to, I think we have 7 companies. So we're going to try to bang out 7 companies in one video. This one's going to be full of information, full of goodness, and potential good information in regards to investing and long-term and swing trades and things like that as well.
Yeah, we have 7, well, probably 6 relatively large ones and then a small one for you, but we couldn't go through all 400 companies that were reporting today. You all wanted some quick hits, so we're going to do our best to keep them to about 3 minutes apiece. Of course, we will start with Big Daddy Apple first, or Big Mama, however you want to describe that one. But Apple, biggest company in the world. Dan, let us know what you see here with Apple's earnings.
So I thought Apple's earnings were relatively strong. I mean, they did increase revenue. They're not going anywhere. They're a solid company in general. I think compared to, we did see a little drop in the actual stock as well after the earnings came out. I think a lot of that is due to just maybe not enough for Apple. So their sales have increased. Their products are strong. They are coming out with Apple One, which is $14.95 for per month for a user, or you do a family plan, but that gets you access to a lot of their full-time apps or most popular apps, so like Apple Fitness, iCloud, Apple News, Apple Music, Apple TV, Apple Arcade. So a lot of cool things in that. It's going to be coming after the Netflix model of the not quite streaming, but very similar to it, where you just have the subscription basis model. So I think they have some cool things coming out. The revenues, I think, were good. And you have the report up there. So if you want to run through what you're seeing on the actual numbers.
Yeah, so services is one of the things that you were highlighting here. Just year over year for these quarters, 12.5 billion last year at September, and then this year 14.5. So big growth there. Products down a little bit year over year, but as you can see, like relative to this time last year, you have overall growth. I think some of that's just due to the iPhone cycle. Obviously, you're not going to go out right now and buy an iPhone 11 when you know that the 12 was coming out. So I think that leads to a little bit of that. Americas obviously is the big one. 30.6. Again, these are in billions. So normally we're looking at millions. This 30 here is billions. So 30.6 billion. Europe had strong growth. Greater China down a little bit. Relative these 3 quarters compared to last year's 3 quarters. Japan, small growth there. And then you also have rest of Asia Pacific growing. You can see iPhone is where you had 33.3 versus 26 this quarter. So you can see that's down a little bit, but Mac's up, iPad's up. Wearables, again, I wish they would break some of these out. Like this is your AirPods, your watches, all those types of things. So they don't break that revenue out anymore as far as which product. But heck, I mean, these could be entire companies all by themselves, and they would be doing absolutely phenomenal. Even, again, service growth is where they're getting a lot of just percentage growth. So that looks fantastic to me. And yeah, it looks really, really good. So all the numbers are just absolutely massive. Where do you think we go from here? Like you said, they're gapping down a little bit after hours, not massively, but what do you think about Apple as far as direction from here?
I think if you're not already in it, you could start buying it. It's going to be a buy the dip opportunity. It's going to be a long term. They do have a dividend. It's comparably small to other dividends that are offered, but it's not really The dividend is just kind of the cherry on the pie. You're in it for the growth portion of it. They do have huge numbers, large amount of cash on hand. As it comes down, I mean, even tomorrow, why not pick up a couple just to have worst case scenario they come to 100, worst case probably 90 maybe if that gets down there. Just keep buying as it comes down, add it to the portfolio. It's not, the risk is not really there. I mean, the only, out of the numbers you showed, Greater China was the only one that decreased some of the revenue coming from it, and I think a lot of it had some of the manufacturing issues. So honestly, it's a strong company, and I think we're gapping down for two reasons. One, I think just they did beat, but people were just hoping for a little bit more out of the largest company. And the second thing, which is kind of grim tone for the rest of the market, is that they did not put out guidance, which I know a lot of people were looking for the guidance to come through of where they could see themselves, because that could relate a lot to just the economy as a whole, just being that Apple's so large and what their predictions are, if it's going to get healthier or worse. And the reason they put out for no guidance is because of COVID. So it's a sentence right there that kind of probably puts a little fear, a little doubt potentially into investors that are just looking for the safe holds. But I don't think, or the economy in general, but I just don't. I mean, Apple's not going anywhere. It's a definitely a buy the dip opportunity.
Yeah, I right now have put sales at 100 regular November expiration. I would love to see this gap fill, and that would definitely be a place that I would load up. But again, I don't think you can ever really go wrong owning Apple and being long on it. Let's jump over to a smaller one. So this is apps. This is one that I'm in. I'm in from way lower, but I think that this company represents a lot of opportunity because it is a smaller company. It's only a couple billion in market cap. They do digital advertising on applications and smartphones. They also, the reason I found this was they partner with the Trade Desk, which I know has been going gangbusters. So this one has already had a little bit of a move, but they did report earnings, and they had some really cool growth. Again, going from billions down to millions seems like pennies, but their first fiscal second quarter of 2021 revenue, 70.9 million, representing 116% increase. And then their application media revenue increased 50% year over year. So some really strong growth here. Again, we won't spend too much time on apps, but this one does have quite a bit of growth. So I think that this one is a watch and could be a potential for a buyout eventually. If you look at the weekly, obviously this thing was way high, way back before the Great Recession. It looks like a giant bathtub pattern, but I do think that this one is buyable on dips. I know you haven't looked into this one too much, but do you have any thoughts on it just from looking at it real quick?
This one's your baby. You tell me you picked it up from $3. The journey of the stock. Dr. Falco finds it around $3, starts investing in it, and now all of a sudden it's in a earnings report following Apple. So, I mean, it's starting to get onto the radars. I mean, look, it had a great move already. Can it come back? Yeah. Is it as secure as Apple? No. But this would be more of a still speculative play. Based on, and again, I didn't know too much about it. I've saw the ticker before, but not really. I wasn't involved with this stock as much as you might have been, but with this one, I think it's potentially a sneaky little growth company. The products that they have their hands in, I mean, they're putting the advertisements into different apps and cell phones and mobile devices and things like that, which is a continually growing industry and field. So yeah, I think the buyout opportunity, it's worth probably looking into if you guys are looking for something that, as you mentioned, could get bought out or even potentially have a growth opportunity. Obviously, we've seen in Google, we've seen in Apple, we've seen in these companies that are offering different advertising on apps, on games, on things like that. They've done really well, and this is a company that's focused on that. So I could see a potential growth opportunity, and like you said, it's kind of a buy opportunity. Where would you get in, since considering this is your baby, and you've been watching this one for a while? Do you wait for a bigger pullback? Do
Well,
you
I
try
added
to get
right
it?
here. I like this area off the 50. I like this little morning star reversal right there. And I do think it's not gapping. Yeah, it's pretty much gapping flat on earnings just because, again, it's great growth, but I think it was already expected. And so the stocks had this run up. So pure speculative play. I think anywhere in here or dips, potentially into like 24. Very viable. Here's your
I
long
am
term moving averages.
I am seeing a little bit of a retest gap. Is that a gap that you see getting filled sometime in the future?
Oh, over here, I don't think that this gap fills. I think this is one that's and this company's market cap's so small. I don't think that this gap fills.
Okay.
So that's my thought on apps. A little bit more of a speculative play, but thought we'd throw that one in there. But let's jump over to Twitter. I know this one got lots of attention over the last couple days. Maybe Jack Dorsey's beard got a little more attention from him out there from Capitol Hill. But their earnings really weren't too bad. I just think that with Pinterest and Snapchat just having such strong earnings that even though these were good, they just weren't good enough.
Yeah, I mean, if we're looking at what they're putting out there, the third quarter they're saying had 29% of the average user, so it's up 29% year over year. But in Q2 we saw 34%. So Q2, you're seeing that across the board with a lot of the even Apple had some of those numbers. Facebook, when we get to Facebook, you'll see Q2 as well. But you're seeing a lot of the streaming services, a lot of the users during Q2 just much higher because people are at home, they're bored out of their minds sitting on Twitter and other whatever websites they could find. So to see that decrease in Q2, not too alarming. You're still higher than Q1 on that as well. And besides Q2, I mean, it's the highest growth that they've had. So I think they have the user base. They have the beard in the CEO. I mean, it's solid from a lot of standpoints. And financially, the thing that drives me crazy about Twitter is the amount of money that they're just bleeding. And they've consistently bled money for a long time. I don't honestly, I don't know what they're spending their money on, but every single year their increased costs just keep jumping. And so that would be a concern for me as an investor in Twitter. And honestly, I think Pinterest, I think Snapchat, I think Facebook is kind of eating their lunch. They have the president of the United States literally using their platform nonstop, and they still can't figure out a way to just make money without spending money, which to me is a little off-putting.
Yeah, they even said the expense growth of 13% was slightly higher than their expectations as COVID related operation. I mean, I don't understand what would cause what from coronavirus, what would cause their costs to go higher. That's a little odd to me. Unless it's just maybe more people to censor posts as it goes into the election. I know that's a hot topic right now as they're censoring and banning of people. But like you said, their expenses just continue to grow, and then their cash flow. So you can see their net cash flow from operations down. If you look at adjusted free cash flow is actually negative. So yeah, what are they spending money on? And I know if we scroll down here to their and we don't have too much time to deep dive into every single one of these since we're doing a little more quick hit, but where was it here? We had a really large, I thought they might have done an offering, but I couldn't find anything. So I'm not sure exactly what this purchase of marketable securities was, but they spent $1 billion more essentially than they did last year at this time on something in this category, but I could not personally find what it was in my quick scanning through the earnings. But like you said, expenses looks like it's an issue for them. So
Yeah, the other apps that we saw, I mean, Snapchat, that was one of the big features that I liked, is the fact that their costs are decreasing. Like, and once you have the infrastructure built, the site built, I mean, you still have tons of employees and stuff like that. But the fact that it's quarter over quarter just continuing to increase, like I said, that's what's a little bit worrying to me. And you just pulled up the stock on the screen. It shows. It needs time to figure out how to really cut costs and deliver the profits as opposed to um, spending the money to deliver more users or more advertisers or that general area.
Yeah. So what would you have any play on this as far as the stock? I mean, it's down 16%. Is this a buy the dip, or do we let it pull back more?
I have no problem putting day trades in on Twitter, even if it gives me an opportunity for swing trades. I don't want it in my long term portfolio. I think there's just better opportunities right now.
Yeah, I agree. I like Twitter. I like a lot of the humor that comes on there. I think it's great for news, like to get news really fast out if you follow the right people. You know, that kind of FinTwit, the financial Twitterverse is cool. But yeah, I don't know if the stock is really all that investable, like you said. How they monetize and the way they spend money, I'm not really sure. So it's definitely day tradable. I don't know that I'll be shorting it tomorrow, already down 16%, but there could be some fade potential in the works tomorrow. It looks like it's coming into right into the 50, and it did bounce off the 50 a few times. So otherwise, if it doesn't bounce there, I think it probably comes down to 40 and the 100 SMA. So that is where if I wanted to invest or build a long-term position, I think I would wait for that area, wait for that
Yeah,
40 number.
at a certain point, there's always a price that can make sense. I just don't think really if the price is in this range, it's just still too overpriced for a company that has to. They have to do a little bit more to prove themselves to me that they could figure out the finances of the company, and they have the user base. They do have advertisers coming into it. They have a lot of good things to like. It's just the fact that they're spending so much, and I don't know if that was convertible notes or they were raising money for something it looked like. Not sure what. And right now, you do have the political disdain with who's censoring what they're censoring, why they're censoring things, and that no matter who you're voting for could leave potentially a bad taste in somebody's mouth as well with a certain brand.
Yep. Well, let's go over to Google. This one, just a perfect bounce off the 100 the last couple days, and this one's actually holding up after hours with Google. So they returned to growth again, their revenue. So nice bounce from Google up after hours, 6.75%. It is holding. Not the most exciting report. Again, I know they do a lot with YouTube, and so you can go to their website, watch their earnings YouTube video. But if you just try to find a PDF, I thought there's no way. There's got to be something with more information and better looking, but there really isn't. So, anyways, we'll go ahead and go over it. So it says they had a strong quarter consistent with broader online environment. I mean, who's not on the internet or using Google right now? And again, they did have revenue, so return to growth, increase in revenue, 14% year over year, quarter over quarter. Last quarter was the first time they did not grow revenue, which I think a lot of it was due to some one-time expenses. But the other thing that I thought was really cool was they are breaking out some YouTube revenue. So nice growth in YouTube ads. Why do you think that is, Dan?
Have you watched a YouTube video lately?
I have, and they always start with ads.
Have you noticed now though that they don't make you sit through one, but now two ads before you watch a video?
Yes, that is quite
I don't
annoying.
I don't know if there's anything to that, but that it almost looks like the revenue doubled off of from year over year.
Almost, yeah. They just double
I
the
mean, I don't
ads.
see anywhere that says that the YouTube numbers of videos viewed has increased or anything like that. I mean, obviously YouTube is just wildly successful. It was good buy on Google's part back in the day, but yeah, they're sneaking in that extra ad, and I don't know, but I'm pretty sure that could definitely play a part into some of that revenue as well.
Yeah, and I guess it means that there's demand from advertisers for those ads. So nice growth there. Again, Google, you'll see later with Amazon, Apple, they don't break down some of these categories, I'm sure, as much as some investors would like, but they did break out cloud. So they're starting to break out cloud. And while it's still, relative to Google, I know for some companies, $3.4 billion in revenue would be absolutely massive. But again, for Google, it's a little bit smaller. but you can see nice strong growth in Google Cloud. I was looking for some Waymo information, just because of the just how hot like the electric vehicles and self-driving and everything is, and I didn't really see that anywhere in here. I think that's in other bets. I'm not sure what all is in other bets, but I know Google is known for having a lot of different things out there. Some of them, well, lots of them fail, and some of them, are big hits. And then hedging gains and losses, it's always curious to see like what goes into that category. So overall, though, a really solid report from Google.
Yep. Yeah, I agree. If you own it, continue owning it. It is definitely one for long-term portfolio. It's already jumping after hours. Um, my question to you is it ever too late to add Google to your portfolio?
I don't think so. I don't think so. Again, I know that they have some antitrust things with the Department of Justice right now. The EU already fined them, $6-7 billion. But outside of some fines, Google's not going to be broken up, I don't think. And if it did, and if for some reason they had to spin off YouTube, I actually think that would unlock value. But all of their products are free to the users, and so I don't see how like you're going to take a company that gives away most of its products to people for free, and you're going to try to say that it's a monopoly and break it up or do anything like that. So they'll pay some fines and they'll move on. Buy this thing off the long-term averages, whether it's the 100, the 200. If you wanted to buy this down near 1,000, I think that you missed your shot. I know I bought some. I wish I would have bought more, and I actually had a order at like 999 and change, like right below 1,000. I figured, oh, maybe we'll wick through, but I don't think we ever come back down there again on Google. So I think it's always a good play. Just try to buy off the long-term moving averages because it does have some volatility. So I don't know again that I would just go in and start buying tomorrow, but buy on dips. I think Google is definitely a safe bet long term.
I agree with that.
How about Mr. Zuckerberg and Facebook?
The Zuckster. So Facebook, similar to what we saw with um, going from Q3 off of Q2. I think a lot of the you're just getting a hit heavier in Q2 with everybody sitting home on Facebook, things like that. So we did see, it looks like a little bit of a dip in quarter over quarter as far as the active users, potentially, but in just growth aspect, they're still growing. They're still getting new users onto the platform. I think you mentioned before, people were saying that they're eventually going to get down to single digit growth.
Mm-hmm.
And as you circled right there, they're still hitting double digit % year over year growth. So they're still growing. And why does it seem like Facebook just never not has controversy around it?
Yeah, I think it's just because it's so big. Everybody's on it. As much as people love to hate Facebook, like we all have a Facebook, we all have an Instagram. We may not post on it very often, but we're on there in some way or another. They copy, everyone. They tried to copy Pinterest. They got Reels out trying to copy TikTok, and they say what the biggest flattery is imitation. I think I totally messed that up, but yeah, they try to intimidate, not intimidate, imitate. Maybe they do intimidate, but
maybe they're intimidating too. I don't know.
Yeah, they imitate their competition. Sometimes they do it well, sometimes they don't do it well. But you can see, I mean, year over year, advertising, I mean, up 22%. Like, where else are advertisers going to spend money? Not on television ads because everybody's cutting the cord and disconnecting. So I think Facebook is just a cash machine. One thing that I thought was interesting, and I don't know why maybe they have to put it in here somewhere, but they had this effective tax rate, that they just plug in here as being 4%. I don't think that earns them any love from people outside of Wall Street with talk about taxes and big tech and everything else. It looks like a one-time tax benefit of 913 million. But at the same token, I don't think that earns them any friends. So I do think that Facebook's going to continue to have controversy, but they continue to spin off lots and lots of cash, and again with Instagram and Facebook, and then all the other things that they're adding. I don't see them really going anywhere. I know that you had pointed out the iOS changes. What was the changes with iOS 14 here?
So iOS has put a feature on where once you get the app, and it's not just Facebook, there's a few other ones too, but it was what maybe a couple quarters ago now, where the big thing was the privacy from Facebook, and then Zuckerberg had to sit in front of Congress, answer questions, and everybody was talking about it. So Apple has on their feature that you have to agree for Facebook to track where else you go outside of Facebook on the internet. So right now, if you have a Google phone, if you have, I don't even know what other phones are out there besides Apple and Google, really, but I know there's a ton more. But if you have any of those phones and you download Facebook, you're already just automatically opted in to be tracked by Facebook around the internet. So by Apple putting that into the system, and obviously it's a little bit concerning that, I mean, to Facebook, because Facebook did include that sentence right there. So if a lot of the other companies are going to do that to Facebook as well, it's almost, why would people, if it already comes with the app and you just go agree to all the terms that nobody ever watches or listens to or reads, and you just hit agree, okay, let me see who my friends are, you're going to just accept it and that's it. But here you have to actually go through it and click, yes, I want it to be tracked by Facebook. Probably not those exact words, but more people are going to opt out. And Facebook's revenue from their advertisers, they're only as good as the information they could give the advertisers to track you, to push those annoying ads of things that you probably didn't even know you wanted to buy, but you end up buying it because they're just tracking you all over the internet with that ad. So the information that they give to, if they're not getting the information as to where else you're going on the internet, that eventually could come into play with some of the advertising revenue and who's advertising on what platform, because they could choose, each company could choose what platform they're using. So that could eventually come in. It's not going to be immediate. Not everybody has an Apple iPhone, and some of them are still selecting, yeah, go ahead, follow me. So it's not going to come in, but I think that could eventually affect some of the information that they have, which information, Facebook is free to everybody because you're the customer, you're the product.
Yep. Yeah, but I mean, I know I'll sound like Mark Zuckerberg here, but why would you want worse ads? I mean, at least this way you're getting shown ads for things that you searched for online. So yeah, I guess it goes both ways, but yeah, I can see that as a bit of a
They're
headwind.
Give you the ads
them.
either way, so yeah, I guess you're right.
Yeah, you're gonna get ads either way. Why not see ads for stuff that you searched for? Unless it's something that like you shouldn't be searching for, and then someone else, looks over
I don't
your
even know if it's
shoulder.
on the fact of like what you see that's important. I think it's the advertiser, every time they get a click on that ad and an appearance from the ad. So if they're getting clicks on the ad, they want, for the advertiser perspective, they want the clicks to convert to dollars
Yeah, so they
at a
want
high
targeted.
ratio.
Yeah, they want targeted advertising. Yep. So Facebook, down a little bit after hours, not very much. It's been kind of all over the place in here. I know it got this gap was over by Snapchat earnings, and then it had this big bearish candle. It was up today. What do you think about Facebook here? Where do we buy this one, or do we buy it?
I do like Facebook long term. I think it needs a little bit. I want to see a little bit bigger of a pullback before I pull the trigger on it. Whether I get it or not, I have no idea. But something's telling me that I think I could probably. It's not something I have to jump in and just own today. Um, they they already have a large user base. Yes, they got Instagram. Yes, they got Facebook, WhatsApp. So a good heavy portfolio of solid companies that you're essentially investing in when you invest in Facebook. But we've seen dips on it before. We've seen news cycles come out before many times. I think one right now is still going on. I think they're included with some of the censorship of politicians. But um, based on that, I think if you get severe dips, it's a good buy. Otherwise, at these levels, at these highs, I don't need to own it today.
Yeah, I really want to see it inside this box, possibly fill this gap, right around 230. Anywhere between 230, 240, maybe even a little bit, if you're starting a pyramid position or something like that. I think that, you build a pyramid like this and you're buying for longer term, like you're not going to be upset about owning Facebook. So, yeah, that's good old Facebook. Let's jump over to Activision Blizzard. I know this has been a big favorite during the Corona and during the lockdown, and actually they have a pretty cool deck here. So one of the things that drew me was not only did they pretty much beat across the board. I wasn't like a massive beat, but as I went down here and looked at, I think it's this, yeah, right around with Activision. So there's a couple different, obviously ATVI, but there's a couple different like names. These are it's more like a conglomerate of video game companies. But right over here, this revenue grew 270% year over year. These are like in-game purchases, so not just buying the game, but then purchasing thing inside the game. So in-game revenues, strong sales of premium Modern Warfare and Call of Duty Mobile, and the successful Tony Hawk launch. I mean, that is just huge because the more time people are spending on these games, obviously, the more money they're spending in game, which is phenomenal. So that just my eye got drawn to that 270%. And then I think you mentioned Candy Crush, was it?
They apparently own Candy Crush. Yes.
Yeah, so Candy Crush, I haven't I don't play Candy Crush. I don't really know anyone that's playing Candy Crush, but evidently some of you out there are still crushing the candy, and this thing has grown solidly year over year. And what was it, $1 billion from Candy
They're
Crush?
set to generate over $1 billion in just Candy Crush, another $1 billion in World of Warcraft, and $1 billion in Call of Duty. I know Call of Duty's still big. World of Warcraft, I thought was big a while ago. I guess people are still playing that one. And Candy Crush, I thought was a fad, but I don't know. Maybe I'm wrong. I guess I am.
I mean, World of Warcraft revenues looks like it's still growing. Again, revenue from King, this is who has Candy Crush, is still growing. So, yeah, Hearthstone, Overwatch League. I know my girlfriend's son is on like an Overwatch esports team for his tech high school, and they have like Overwatch practice and like. So you just go to practice at school and play video games. Yeah, that's what they do. So this is definitely a growing industry. I know that this thing was dipping a bit after hours. I had sold this back at the beginning of September when I sold everything else. I was in about 10% of a position, and I forgot that Activision was even reporting today, to be honest, until Thinkorswim dinged and I bought some shares, I guess, right below 74 from a second level of a pyramid that I had. So it looks good. It's already recovered. Looks like after the call. What are your thoughts on Activision from here?
Yeah, so Activision is a company that, I mean, the industry as far as video games have changed from Atari back in the day. It's definitely come a long way. It is people that I'm not a gamer, but it's a whole culture around it. Even a lot of videos you can just watch other people's now on YouTube playing video games. I haven't been able to sit through one, but um, I think it's a lot of it started with they've. I liked Activision since Rock Band came out because with Rock Band it was like one of the first games where um, you couldn't just buy the game and just play it. Then you had to buy the guitar, then you had to buy the microphone, then you had to buy the drums, and you had to buy. So they had ways of upselling. The big thing to the entire gaming industry is this in-game sales. So again, the people that are just addicted to Candy Crush, they're paying for the new levels, or I don't know, Twizzlers or whatever they're paying for in Candy Crush. The same thing with Call of Duty, get you new weapons, get you new levels, get you new advanced codes, things like that. So just the fact that you could buy the game and then there's more purchases to be made for the continued revenue, that's game changing for the game company, the game industry. So I do like this as a continued growth. Is there's going to be more popular games that come out, as well as just time goes on and games are created, that they'll continue to see the old revenue plus the new hot game, which is not even released yet. So I think this does have a good, strong uh, growth opportunity ahead of it. And I think the gaming industry, as big as it actually is right now, is still almost in the infantry stage of games. So yeah, I actually like what you came in on that second level to buy. So kudos on that. Completely forgetting to that you just have orders out there and getting triggered on. So I like that price. If it does sell off, I think it would be um, there's going to be more opportunities to buy in. It looks like we're trending down a little bit right now, but I think if you did get some kind of news, even coronavirus news doesn't affect it because just more people are actually going to sit home and play video games.
Yeah, and that's one of the things. This was the second level of pyramid. I think I got a third down at, I think it's like right around 71, 72, and then like a really big order down around 68, because I think this one consolidates for a while up here. It's really good for Dow theory, this stock, it seems like in the past. So buy low, sell high, and if you do have pyramids out there, again, I'm not a financial advisor or recommending anything, but here's what I do. I make sure that those orders are GTC EXT so that they can fill in extended hours because of things like this. Because otherwise, if that order was just live tomorrow and then we bounce, like I'm never going to get filled on those shares. But because it's extended hours, that order's out there, and I picked up those shares and already up a little bit on them. So that's always nice.
I love it. Yep. Yeah, we're approaching, I think, new highs on that chart. Um, I'm not a huge fan of buying at all-time highs. I think that was the all-time high we hit not too long
Yeah,
ago.
up here. Yep.
So we're getting a little bit of pullback. That's expected. So everything looks relatively normal. We just had a massive surge, and again, that could have also been a lot to the Corona play, just people anticipating that people are going to play more video games. So yeah, you get it on the pullback. I think it has a good growth story behind it.
All right, let's finish it out with the big boy, Amazon. I mean, everybody knows what Amazon is, what they do. Probably does more than a lot of people think. But Amazon coming in with I thought was a really, really strong report. This stock has obviously held up really, really strong. Actually got this huge surge, during the coronavirus, and has been consolidating up in here. We did make new highs, a couple times here. This is early September, that big push. So it is up there, but the report I thought was absolutely fantastic. Operating cash flow, a lot of people always complain like, well, can they actually make money? I mean, their cash flow grew 56%. Free cash flow increased to 29.5 billion. Again, these are billions with a B. And net sales grew 37% to 96.1 billion. I thought this was just a phenomenal report. I mean, what are your thoughts on it?
Yeah, the company's strong, and there was an actual documentary that I think I saw. I don't know if it was. I think it was actually on Netflix about Amazon, believe it or not. But it was about Amazon and just all the different businesses that they have and things that you don't even think about that they're tied into. So Amazon, the commerce site is strong. People go there every day. Again, if we get second wave coronavirus, people are still sitting at home. And ordering things. If we don't get a second wave, people are going to stay home, order things off Amazon. They've innovated a lot of the transportation industry. They're getting into a lot of the electric delivery vehicles for some of the transportation and stuff like that. So they're still staying with the trends, but it's not even. It's not. I almost think the AWS that they have, the web services, Amazon Web Services, is almost a whole industry by itself.
Mm-hmm.
It could be a separate company from Amazon and just deliver strong revenues. So it's just, and that's only a portion of what they do, because they have so many different tentacles out there as far as new, as far as ways to grow the business and different areas that they're looking for, and even with Alexa and other Amazon devices, the TV stick, they have Prime services. They have all of the stuff that people know about, and even I think, do they own Ring itself, or is it just Ring services?
The Ring doorbell they own, and then some of RNG's. Like, I mean, what doesn't run, as you mentioned, on Amazon Web Services? Whether it's like global payments, I mean, collecting data for the development of yeah, a vaccine by Moderna. They're partnering with the National Football League. I mean, what don't they have their hands in?
If
Verizon 5G. I mean, yeah,
if you want a company that uh, is sustainable to almost any economy, I mean, it's the economy is Amazon. I would venture to say. So I don't really see how you could go wrong with Amazon. They're going to keep growing, and even some of their divisions that they have now, which are pretty solidly built, still has plenty of opportunity in it. So you can't honestly go wrong with. And I remember even growing up, we had a whole thing with Big Brother. Big Brother's watching you. At this point, Amazon's figured out how to have you invite them into their homes. So you got Alexa listening to you all the time. You got the Ring doorbell watching you all the time. You got everything that you own is hooked up into. You're streaming off their website. So they've managed, and people are buying the products so that Amazon could be in there. In a way, it's a little bit creepy and kind of a little eerie, but they're making money, and they have you exactly kind of where they need you to be a consumer of any product that they want to kind of almost push on you. So yeah, it's a company. Like I said, in some ways, it's a little creepy if you actually know what Amazon owns and what they actually do. But there's still, if you're looking to just make some money and invest in a strong company, that you can't really go too wrong with Amazon.
yeah, and you can see like they make so much more. Yeah, their net sales from selling things, and third party sellers grew tremendously. That's obviously a lot, but if you go down to operating income from web services, they actually make more money from the Amazon Web Services than they do from the rest of the like Amazon.com sales and things like that. But yeah, they're literally into pretty much everything. They actually do provide quite a bit of information in here. I know we're trying to keep it a little bit quicker, but there's lots of great stuff. Go through the Amazon report if you're an Amazon fan, or listen to their conference call. As far as the stock, I know buying off of I think this was the 100, wasn't it? Come on, TradingView. Yeah, here we go. Buying off the 100 proved to be successful in mid-September, and I'm not sure if we're going to get down there just yet. It looks like after hours we might be dipping a little bit, but I think if you want to pick some up, that's where I would pick up an additional share or two. Again, at $3,200 a share. A share or two can be a lot of money for folks out there. What would be your play on Amazon?
I think very similar. We are gapping down from yesterday. I would like to see a pullback, not because I think one's needed, but just because I want better prices. That's
Yep.
it. So if we do get some kind of dips in there, which very well can happen. I mean, every once in a while. I think Jeremy posted in Slack. What was it? Apple dipped like 20 times in their entire career of like 20% or something like that. So there's just some crazy numbers. So even though the company's large, has their hand in everything, I could definitely see us maybe buying at some kind of low.
Yeah, if we ever get to like the weekly 50, I definitely think that would be a place to really load the boat. Right now, that's 26.30. Again, as the weeks go on, I think that's going to go higher and higher. And so, but Amazon is definitely one to have those puke orders, as we call them. So those GTC extended hours, limit buys. I had one back here that actually got, the price doesn't even show because it was after hours, and there was a dip down to it was like 14.95 or something like that, somewhere over here. Maybe it was one of these earnings, maybe this one actually. So Amazon's definitely one. Pick up on dips. Again, I know it's expensive. If they do announce a split, I think this thing goes to 4,000. I don't think that they are going to split it, but yeah, buy the dips. So I know that was a long video. If you're still with us after 44 minutes, we tried to be quick, but Yeah, with 7 earnings and a lot of big ones, it takes a little bit of time. So make sure you like, subscribe, hit that follow button, hit the notification bell. And then where else can they check us out, Dan?
They could go right to reallifetrading.com. Check out all the information, tremendous videos in regards to learning to trade, where to buy, where to sell, how to trade options, how to hedge with options. Election year is coming, so election year is here. We're what, 3-4 days almost away, a week away. So hedging with options is a great course. But any of the key plays of how to continuously be profitable in the market, you could definitely check out on our website, reallifetrading.com.